By the end of this course, you will be able to determine whether a promise is separately identifiable, identify and account for material right, assess whether the series guidance applies. As you learn, the 5-step model is a comprehensive framework which defines how much revenue is to be recognized and when. This course will focus on Step 2, identify the performance obligations. Step 2, identify the performance obligations of the 606 Revenue Framework requires identification of all the separate goods or services promised in that contract. In other words, distinct performance obligations. Some of the more challenging concepts to apply within Step 2 include determining whether a promise is separately identifiable, identifying the accounting for material rights, and assessing whether the series guidance applies. For entities in many industries, the concept of separating promises within a contract into distinct units of account, in other words, performance obligations, is entirely new because their transactions were not subject to the guidance on accounting for multiple element arrangements under prior GAAP. Let's start with a fairly simple example that demonstrates why it is imperative to promptly identify performance obligations prior to applying other aspects of the 606 framework. Click on the orange company to work through an example. Review the facts about Orange Company and how those facts are used to identify the unit of account.
You may want to pause here for a second and read through the facts of this case. Company Orange has decided to recognize revenue when all units have been shipped to the customer. Take a second to pause and read through these answers and determine which ones are potential flaws in their recognition. The correct answer is that all of these are flaws, and they should have been considered by Orange Company when setting up their recognition.
Promises in a contract are considered distinct if they meet two criteria. First, they must be capable of being distinct, but being able to provide value on its own isn't enough. The goods or services must also be separately identifiable, which is the second criterion. In other words, the good or service must be distinct within the context of the contract. In assessing whether promises are distinct within the context of the contract, the seller must determine whether the nature of the promise is to transfer each good or service individually, or instead to transfer a combined item to which the promised goods or services are inputs. The standard provides 3 factors which indicate that multiple promises are not distinct. But this determination can involve significant judgment and there are no bright lines. Let's take a look at an example that demonstrates this point. Click the Green Company image to work through the example. Review the facts about Green Company, noting how additional facts come into play when deciding whether or not the equipment and the installation are separately identifiable. Review the facts for each fact pattern before answering the question. Are the equipment and installation separately identifiable? In other words, are they separate performance obligations?
There's a lot to fact pattern A, so take your time and read through it and pause as needed. The main thing to focus on here is that they're providing a good and that installation of that good, but there's not significant integration services being provided. The question is the equipment and installation a single performance obligation or separate? The answer is that they are separate performance obligations. This is because they are not highly interdependent or highly interrelated and could be provided on their own. Please review the facts of fact pattern B. The difference here is that the equipment and service are being provided specific to the customer and are considered turnkey, i.e., the equipment and the service are customized for the customer. Now the same question. Are these services and equipment to be provided as a single performance obligation or separate? As hinted at, due to the heavy customization, these are provided as a single performance obligation. Another quick question before we move on. Which of the following factors generally indicates that promised goods and/or services are separately identifiable or distinct within the contract? The answer is A. The promised goods or services are not inputs to a combined output, unlike the other answers, which indicate that there might be a single performance obligation.
ASC 606 introduced the notion of a material right. This concept was not explicitly included in the prior revenue accounting guidance. The standard tells us that if a contract grants a customer the option to acquire additional goods or services, and that option provides a material right to the customer that it would not receive without entering into that contract, then it must be accounted for as a performance obligation. A common example is a discount that is incremental to the range of discounts typically given for those goods or services to that class of customer in the same market. Review the fact pattern presented and consider whether a material right is present.
After considering the facts, please answer the following question. The correct answer is B, 30%, because this is the excess compared to the normal discount rate of 10% given to all customers. So the next question is, how does the entity allocate the transaction price to those material rights? You can see in this answer that the company would need to come up with some estimates, such as the 80% likelihood that a customer will redeem the voucher and the next purchase, which is most likely to be $50. By taking the $50 purchase at a 30% incremental discount and the 80% likelihood, you come out to a valuation of $12 for that voucher. Utilizing those values, you would then proportionately add value to each of the material rights. You can see that here in this calculation shown on the screen. The next question is, when do you recognize that revenue? In this case, the $89 would be recognized when the product A was sold. The $11 discount would be recognized when the customer redeems it.
Another new concept introduced by ASC 606 is the series guidance. The standard requires that a series of distinct goods or services that are substantially the same and that have the same pattern of transfer to the customer should be accounted for as one performance obligation when both of these two criteria are met. This notion was included to simplify the application of the model and to promote consistency in circumstances in which the entity provides the same good or service consecutively over a period of time. A common example is a repetitive service agreement. To be accounted for as a single performance obligation, first, each of those promised goods or services must be performance obligations satisfied over time. Second, the same method would be used to measure the entity's progress of transferring each distinct good or service in the series to the customer. Let's work through an example of when to apply the series guidance. Click on the logistics company to review the facts. Review the facts about logistics company. Consider whether the series guidance applies.
The question is, how many performance obligations exist? Based on the series guidance, the correct answer is C, one performance obligation. Feel free to pause and read through this justification that is now on the screen.
In summary, why is it important to correctly apply the series guidance when the criteria are met? The allocation of variable consideration across all performance obligations to one performance obligation or to one promise within a performance obligation may change depending on whether the series guidance applies. The accounting for contract modifications differs significantly depending on whether at the date of modification, the remaining undelivered goods or services are distinct from those already transferred to the customer. Proper application of this series guidance is important to this determination. Finally, guidance on changes in transaction price applies differently. In some cases, to a single performance obligation comprised of non-distinct goods or services than it does to a single performance obligation resulting from the series provision. Now that you have worked through some scenarios identifying performance obligations, you should be able to determine whether a promise is separately identifiable, identify an account for material right, and assess whether the series guidance applies.
So let's wrap up there. Comment with any additional questions you may have, and we can expand and help. Please subscribe so you don't miss any new content. Hey, before we continue, let me quickly tell you about a collaboration we are doing with the TB4A Shopify account that can save you some money and help support the channel in the process. Are you an accountant with a sense of humor, but are having trouble expressing that in the third meeting this week about account reconciliations? Maybe you're struggling to find that gift for your accountant friend or their new kid. Or maybe you're struggling to find some not-so-average office gifts. If so, check out TB4A's Shopify and get all the great business comedy gear. They're uploading new items each week. Use my code ACCOUNTINGACADEMY, all one word, for 10% off your purchase. Each sale will indirectly support this channel. Imagine bringing this fun cup to your next pointless meeting. So check out the link and see what you can find. Now back to the video. Alright folks, thanks so much for watching. Please like, share, comment, and subscribe. And if you can, donate at Patreon. Anything you can give helps to keep the lights on and ensures we can continue to create content. And of course, helps feed FIFO. If you want to contact us about anything you saw in this video, accounting advice, or ideas for future videos, contact us at patreon.com/accountingacademy.
This video is designed to be illustrative and does not represent an official position. We make no representations, warranties, or guarantees and assume no responsibility for the application of this material. Please seek advice from a competent professional if expert assistance is required.